Ari, why is Apple a tell, William?
Well, and unfortunately, that list of stocks down 20% from its peak go much broader than just those five names. It's really a market issue that we have going on here. I think there is a lot of attention paid on Apple for the simple reason of its market cap. It's 13% of the NASDAQ 100 composition, 7% of the S&P 500. So we can quantify how important it is to the overall market. And it has been the next to surrender lower. Looking at the chart of Apple, it has fallen below its 200-day average. The support level I'm watching, $138. You got to go back to the stock's late 2020 peak. Very often, former resistance becomes support, even though we're touching it pretty close to it right here, right now. Again, given the damage in the trend, this stock needs to stabilize.
Apple looks, you say, Ari, less bad than the NASDAQ generally, a little, and less bad than some of its, compatriots. Does anything in Apple's activity suggest that we're near that capitulation point, if not in the market generally, in the market for these big bulwark tech stocks?
Yeah, this is such a great point, Tyler. This isn't, again, we're arguing it's not an Apple issue. This is a market issue. Most of the stocks look like this, that they're breaking down lower. In fact, Apple has fallen less than the NASDAQ. It's actually outperforming this very difficult market tape. It's coming off a new relative high versus the NASDAQ. And so to look for, and again, that's our take, that we're at the capitulation stage of this drawdown, that even the stocks, the prior leaders are now selling off as well. If you look at the chart we're showing on the screen is how far below Apple's been from its 200-day average. It's currently 12% below the 200-day average. It could get more extreme. It's gotten more extreme. December 18, the example there. But again, these points, by the time Apple breaks down, you're usually closer to a bottom than a top.
So that's based on history, Ari, correct? In other words, when Apple goes down, say 15% or more below its 200-day moving average, that can signal that sort of fulcrum point in the market.
So we took that indicator, we lined it up with the NASDAQ, and what you'll find, indeed, yes, by the time when Apple gets this far below its 200-day average, 10, 15%, typically those signals occur closer to a market bottom than a market top.
What is the S&P saying to you right now, Ari?
We're getting close, but we're not there yet. I've been on the show discussing these indications of capitulation that we're going to be looking for. One of our favorite indicators, Tyler, is the percentage of NYSE stocks above their 200-day average. It fell as low as 22% as of yesterday's close. Looking at a decade, the past decade, the opportunities have arisen when that indicator falls below 20%. I'd like to see a mid-teens reading. So we're getting close there. I marked 38.15 on the chart as well. That's the common retracement of the prior bull market. If you look back through history, bear cycles typically retrace about that much of the prior bull if we assume the secular bull is still intact, which we are. So we're getting close to that capitulation. You still need the base. It still could be a tough summer, but we think for patient investors with a time horizon of at least 12 months, this does ultimately create the secular bull market's next big opportunity.